Hey everyone, welcome to the GMT channel. Today we are driving into the most trending topic that every investor or every corporate are asking. This is net asset value calculation. So whether you are investing in mutual fund, hedge fund or private equity or NAV is a key metrics that tell you the value of your investment. So if you are ever wonder what exactly is NAV, how it's calculated and why does it matter, so stick around for this video till video end, because we are covered all the features with the example as well, and will explain in the detail investigation as well. So we created one example in Excel file and we'll go one by one. So just refer the Excel file, the sixth row, which tell you the opening NAV of the first uh, January 2025. So how this is work we'll discuss now. So for calculation of the NAV, we require three things. The most important three things are total asset, total liability, and the net asset. And the what how it's changed, these three values change, we'll discuss in the detail as well. So first most question is that how should we calculate the total asset and how we should calculate the total liability of the uh, ingredient of a NAV calculation. So we take an example. So how this is work? So marketable market value of the securities. So whatever the mutual fund or hedge fund or private equity invested, their stock, bond, government securities, or maybe anything, they take a MBS, uh, ABS or anything. So they invested. So daily basis, whatever the accounting platform they are using, maybe the Geneva, Investor, Aladdin, or maybe Layman Edge, anything they are using, whatever the accounting software they are using, they will get a report daily basis, and the whatever the investment they have, so it get changed. Like they invested around, here we take example of a 9 lakh for example. So if they invested 9 lakh, tomorrow it will change to 10 lakh or maybe change to the 8 lakh. So according to the market condition it will up and down. So same like this market security, you get a data with your accounting system. What is cash and cash equivalent? So this is the most important topic, because how it get calculated, because it calculated sometime it will decrease or sometime it will increase. So whatever the ingredient include in this to increase and decrease, we'll discuss in detail. So sometime we'll discuss first part is how this is increase. So increase means if sometime inflow in your fund, like whatever we take example of mutual fund now. So uh, the inflow has been happen. So how the inflow will happen? Through the subscription, if some subscription amount received. Income from the investment, for example you invested into some stock and you receive a dividend. Sometime you invest into the bond, you receive the dividend. Sometime you invest into the any property, real estate, so you receive the rent. So this include, like for example liquidation of your portfolio security or asset. Sometime you have a asset or you sale of the security, that's why your cash will be increased. Or loan get proceed, like for example you take a loan for the enhance your business or maybe to scale your business for research and development, and then you receive a loan from the bank or financial institution. Or reduction in the operating expenses means whatever you invested into your fund but operation expenses has been reduced. Delay payment of your fund, sometime management fee and other operation costs. Or currency gain, sometime you invest into the currency of the other financial market. Due to that the currency of the Indian rupees increase, for example we take a dollar, it decrease, so sometime you get appreciation in cash appreciation. So these are the example of the increase. So same like cash equivalent also can decrease. So what are the example of the cash equivalent which can be decreased? For example, the fund get redeemed, means the money get out to the promoter or to be owner or to the investor through the redemption as a profit sharing. Sometimes the dividend get distributed as per the fund says that if dividend receive you can distribute to directly to the investor. Sometimes the cash will be reduct in the same part, and the purchase of the asset as well, like buying of the security, real estate or other asset of a portfolio. That time also the cash what we have, it can be decreased. The operating expenses may be the employee salary, maybe the utility bills or the management fees, or maybe the taxes to the government, and that time your cash will be decreased. Or commission paid to the broker fees, like whatever the broker you are using for the different, like you using the prime broker, you are using the CFD, you are using some broker which have the special features of the trading. So you have to pay the transaction cost, broker fees and performance link fees as well. Sometimes debt repayment also can decrease your cash and cash equivalent and the currency loss. Sometimes like vice versa we discuss in increase, like currency get depreciated, that's why also your cash get decreased. Now moving to the accrued income. So most part when you are calculating the accrued income, so whatever the factor you have to taken, you have to consider this part as well. So in accrued income we have to take the five major thing or six major thing that we'll discuss now. So first is the income received, means like for the interest received you have invested in government security or bond, so you get a interest receive. Some you invested into stock, you received a dividend. You invested into real estate, you receive the rent. Or you sell some investment, but the payment should be come now, because due to accrual the payment not settle at the broker side or maybe custody side or maybe the stock exchange or some issue in that. So now that payment has received, the pending settlement has been received. Or the loan interest as well, so you given the loan to somebody and you receive the interest. And the income from the structure product as well, sometimes you invest in a product which give the timely return to you. You heard about the money market, so the whatever the fund they have invested, and overnight you are getting that payment as well. So this is a part of the accrued income. So what are the part of the receivable as well? We'll discuss on this part. So receivable are those which but not yet received. Means, for example, in future you will receive this part but still not receive, but we have to note this part into total asset. So what are the example of the receivable part we'll discuss now. So in dividend declare but yet not receive. For example, in future in next month or maybe 15 days some dividend need to be happen, means the payment date has been announced, date has already done, X date and the payment date also declared, but in 15 days you will receive that firm, so that should be noted into receivable part also. So we'll discuss this part, what are the things we have to note it into the receivable part. The first part is the dividend declare but yes not received, that part you have to include. Income interest accrued, means interest on the fixed asset you get in future, loan or deposit, interest payment due but later it will be get, so that part also. Sale of the security, sometime you sell but the settlement will be happen after t plus 1, t plus 0, t plus 7, so sometimes that also. Pending subscription also you can note down. The management fees also you can note down. Rent receivable, reimbursement claim of anything, tax refund like VAT or GST or maybe whatever the country wise tax, that you can note it down. And the settlement delay also, that are the part which is included into receivable. So now we are moving into the total liability list. So total liability list include the fund expenses, fees and obligation. So whatever the expenses they have, So maybe expenses are the salaries, the fees to the management, or maybe any transaction that include, as well as the accrued expenses are those which should be paid. So like the salary and wages, utility bill, rent of a office cost, transaction cost, interest expenses, tax payable, performance fee. You are operating the hedge fund or private equity, then you have to pay the performance fees. But if you are in the mutual fund, so performance fees is not there for that. So this is a note you can note down, but sometime the tricky question will be asked, so that's why I explain you. If you need something on detail, just ping me in this comment us, will show you the detailed video on the same part. So commission payable and legal and the professional fee as well include into the accrued expenses. So what are the commission payment also? The commission payment are something like it include the broker fees regarding this. So if you are doing the equity swap or any product, so commission has been decided for everything. Every product have the different commission, and it will also differentiate according to the broker also. The prime broker is asking high, but the other broker are asking the low. So according to their services, according to the real time show, it will differ. So asset management fees also are there, like if custody, this part is custody is charging to handle their asset. And the foreign payment, for example, you are investing your mutual fund, hedge fund or private equity investing into the some foreign security. So how this part also you have to include, like part like foreign currency purchase, foreign dividend or interest receive, foreign tax liability, cross border transaction, currency hedging and the foreign exchange contract, foreign borrowing and the loan, payment to the foreign employees, international operation and subsidiary, international service provider, cross border merger and acquisition. So these are the part which include into your foreign payment. So now moving to the fifth part, statutory dues increase. So how this part will be increased? Okay, so it will be increased to the tax payable, withholding tax. You heard about the withholding tax. It's come under the statutory dues, income taxes, sales of a VAT and GST, social security distribution as well, like pensions plan, healthcare contribution and employee welfare contribution are included into social. Then the third was the payroll taxes, like for example the according to the jurisdiction, the local tax, national government, such as employee income tax, unemployed insurance, employee related tax. This is included into the this part. The fourth is the regulatory fees, capital gain taxes, stamp duties, transaction, environment and the environment side also, the property tax audit and the penalties, dividend distribution tax. So these are included into the part of the statutory dues as well. So why this we have explained you, because this term is very important. So if you not note it with you, so you when you revisit this video again, you can note down this point. This is the basic point what we can include into NAV, because the formula everybody know that is not a big goal, but what are the product that are include, that is our goal to explain you. Okay, so now the total asset and total liability we discuss, and we take a random amount of that in front beside of that, and total share outstanding we have taken as a 1 lakh. So our formula, what we say, the generic formula is total asset minus total liability and total number of shares. So what we have done, we have put the formula as well to explain you in the better. So what my formula says, total asset minus total liability is B21 and the E23. So same we have mentioned here what we deduct. So we get a 10 lakh and our share outstanding is 1 lakh. So we have taken 1 lakh from here, and our NAV will calculate it D28 and D29, means this column divided by this column, so we get a 10 NAV. So this is a simple example of a opening NAV. Now the question is, if next day some purchase has been happen or some changes has been happen, so how we can note that changes and how we can rectify our NAV as well. So we'll move to the next example. So we take example of a net inflow and outflow 2nd Jan 2025, means next day. So next day what happened, our changes has been happened. So what changes has been happened, what I have discussed, the total asset and total liability. So some few changes has been happened, so now we'll see. So for example, on 1st Jan we have a 9 lakh, but on 2nd Jan the market of security increased by the 10 lakh 50,000. For example, so in this situation, what they have invested into market, so it get appreciated with the 1 lakh 50,000. So that the reason the marketable security has been increased. So I just give the accounting format so we can easily understand the thing. So now the cash equivalent also they increase by 50,000. So what are the product of cash equivalent? You sell the asset, you get a dividend, you get a interest payment, a rent or something. That's the reason which include the cash equivalent, increase in cash equivalent. Your accrued income also increased by the 10,000, and receivable also increased by 20,000. So now when we calculate the NAV for this, so we have to take this column as a total asset. So I will highlight with this column with some different color like blue, okay, and we'll just bold this for our future reference. Same like the liability also get changed. So whatever liability, the fund expenses fee has been increased from the 50,000 to the 60,000, and the change is 10,000 on this, and the accrued expenses 30 to 40,000, the change is 10,000. So total activity change in liability side are around 20,000, and our liability get changed to the 2 lakh 2 lakh 20,000. So I will highlight with this color and just do the bold list. So because we require this two amount to calculate today's 2nd Jan 2025 now. So and the total outstanding share, because here we can see that the marketable security change. So it's not a part that for example they means the total appreciation. Sometimes this marketable security also increase if you buy something on that part. So it includes the increase in your portfolio from the day 1 to day 2, and is also increase your things to the increase buying of some in stock or investment also. So for example, your net outstanding share also increase by outstanding share increase to 1 lakh 10,000. So same formula we have put down into this to explain you. So total asset minus total liability and the total outstanding share. So how this calculated? We have taken two amounts, C49. So C49 that we already highlighted, and the next one we have taken this call C61. So same we have mentioned here, C49 and 61 we deduct, we get this amount, and total outstanding share we have 1 lakh 10,000, and same we have divided and we get a NAV for this 11 rupees. So we compare with this, is NAV is 10 dollar. We take example of this as a dollar for now, and the $10, and now next day its valuation increased by the $11. So let's move to the third part, the last. So here also we take example, we take an example of a second and the third. So here also we can see that some purchase has been happened, something will be increased, and particular thing has been happened. So I will not go in detail, but whatever the thing has increased or decreased, we have mentioned here in the D column. But whatever the thing change on the third nav, so with this column is very important to calculate the nav, and we bold with this because we require this to calculate the nav. So I will bold this part, and this is increased. So here just we give the overview. So here the market security increase, cash equivalent also increase, accrued income, but here receivable get decrease. So the change is 1 lakh only, and we have 14 lakh 30,000, but here the 15 lakh due to change of this. And here liability also increase by 3 lakh due to some expenses, accrued income has been done, and whatever the changes is that we have noted down. Because if we not noted down on which segment, like for example accrued expenses, we did not note down, so we cannot able to know that which part this liability is increased or should be, because every time the fund manager think in their view to reduce their liability, because when they reduce the liability, so their NAV will be increased. So asset is not, asset is something, is a good part in the NAV, but liability should be decreased. So they identify like how we can reduce our expenses. Like for example, we take example of accrued expenses. So how they can reduce their rent, how can utility bill, so salaries and all this part, tax and liabilities, commissions. So they discuss and they should reduce to increase the value uh, to perform into market. So we take example, total outstanding share will be 1,20,000, and same we have replicate here. So total asset and total liability here. So we take exam C90 and C101. So same we have taken, this amount get reduced this, and we take the example. So now as per third will be the 10.25. So the most important question as a part of you is the nav get changed to the 10 to 11 and 11 to 10.25. So now as a part of a investment, for example, you are doing the investment of this mutual fund, everybody doing the SIPs and all the thing. So most important question this want to extend for 2 minutes, that if you are investing in mutual fund and your uh, your goal is to invest SIP base. For example, your date of the SIP is 1st Jan. So I noted down 1st Jan is your SIP. So I will just extend this part as well. Okay, so it's working now. So I just take up, down. Okay. So 1st Jan, your valuation of your NAV is $10, and the 2nd Jan, your valuation is 11 USD. This we are asking per unit. Okay, so I will note down per unit, per unit, per unit. And the 3rd Jan, your NAV is 10.25. 25. What we have calculated, I am just replicating same with your example as well. So why this I am explaining, because many person came to us as a feedback, because they are investing into the mutual fund on the day first, but they are getting their next day when they check their portfolio, so they get a valuation with the 11 USD, because 11 USD per unit. Why they are not getting at 10? So this is a just short example we have prepared, so we'll discuss on this part. So this I have noted down as per our previous calculation. So for mutual fund we highlighted the three things. So for mutual fund I will just color it out. So what think we can do better? So this is okay. So in we invest mostly on the mutual fund. The hedge fund are invested by the aggregated investor who have the 5 crore as a network, and 1 crore is a minimum investment, or 50 lakh is a minimum investor. And private equities, a different part, are the invested are not listed in the stock market, but they are investing on the illiquid investment. So we'll discuss one by one. So for example, A is a person whose date of the SIP is 1st Jan. So 1st Jan he buy the for example he buy the 10,000. He buy the one, he have a 1,000 SIP. Okay, so 1,000 SIP. So he invested into 1,000 SIP. So what he should get? He should get he think that he will get the unit like 10,000 divided by his unit is 10. Okay, so he get 100 unit. Okay, so I will note down here as well, so it is not confirming. SIP amount I will note down. Okay, and our previous calculation of a NAV of NAV. Okay, so this is very decent is looking now. So I will just bold and highlight it and just give the box. Okay, so he assumed that he should get 100 unit, but next day he check he is getting less unit. Why? Because sometimes the mutual fund has the trade settlement rate as well, T plus 1 and T plus 3 according to buy. So what happened? On next day our NAV value is 11. So he invested same amount 10,000. Okay, sorry, 1,000. But when in his account, in his mutual fund account, 1,000 divided by 11, so he get only 90 units. So that's was the reason that we are explaining to you, is that if you buy a mutual fund, on next day whatever the NAV, that amount you get a credit of your unit as. And same we can replicate as well. Sometimes the mutual fund have the trade settlement T plus 2 as well. So you invested 1,000 on Jan 1, and you will get when the settlement is T plus 2 on third NAV you will get a unit. So for example, again we have to divide 1,000 divided by unit is 10.25, so you get a 97 unit. So according to the according to the business cycle or trade cycle, or we can say the mutual fund cycle, you will get a credited in your account. The calculation part is the daily cycle, but when you invest monthly or quarterly or maybe yearly. So this is the cycle that is work. Okay, so this part I want to explain, because uh, I want to explain you the this part later. So that's why I explain the example first here as a example, because when we give the example then you can relate with this part as well. So just give me a minute. Why it's not working? Okay. Yeah, it's working now. So I just cut and paste it out here, so it will be aligned. Okay, so this 9, 10 and 11 and 12 row, why I explain, to explain you the first part as well, because the cycle, this is also important when you are working professional or you giving the interview as well. So you, if you add this point into your NAV calculation as well, what I explain you here about the detail of the ingredient, if you explain to the interviewer or when you are analyzing the NAV, so it will be great to explain in the better way and detailed way. So also the trade cycle also play the important role. So we'll not waste much time, we'll jump into the this part, because this part is end of this video. So be focused on this part because this is the important part. So for example, we take example of a mutual fund. So mutual fund usually have the T+1 and T+3 settlement. For example, you buy or sell something, it will settle on the day first, day two, or day three business cycle. If you invested on Friday and you will expect that Saturday I will show, it will not, it will work through the business cycle Monday to Friday only. The same example, we what I have replicated here, the same example is written into the theoretical part by, but I explain you in the detail. Okay, so same he is replying, investor purchase 100,000 share on T0, but settlement happen on T+0. So here what happen here, the settlement is T+2, means here if he invested 1000, he is expecting that I will get 100 unit, but it will get 97.50 unit only. So now you can replicate easily. For hedge fund, varies of the fund, generally T+1, T+3, sometime there is a lock-in period also. So it will depend, invest and redeem 500 share on T plus, it will increase on the redemption and subscription part also, means if you buy and sell, it will apply the same logic here also. So here I take example of a redeem, means sale of the 500 shares T0 and settlement T+0. So for example, in this hedge fund part, if you sell on the first Jan, so you will get a redemption on the 90 only. So here the example of a second. In part of the private equity, it is in liquid part. So many we cannot invest through SIP or maybe the lump sum. So here also the aggregated investor play the role, and it is not listed into market. Due to this, we cannot do this calculation like we done for the hedge fund and mutual fund. But I want to explain you in the short manner the private equity how it's work. The means it is invest directly into the market, who means that are not listed into market, are most of the early stage firm, or maybe the startup, or maybe we can say the VC venture capital. So their capital are the 7 to 10 year their cycle will work. So most of the time they are asking to the capital call, means they when they do the agreement, so they ask various investor to release the fund for the investment into private equity, so they get money through the capital call, not through our SIP. Then capital call amount usually in the millions. So how they invest, and same investor commit 1 million to the fund, like capital call means asking the money, the fund manager or maybe the uh, private equity firm is asking money, and investor submit 1 million to fund, and capital transfer into tranches, means tranches means dividation of the fund. So every fund have the different tranches according to the investor requirement, that some investor are the who want to invest into lower risks, higher risks, according to their risk capacity. The tranches means different diversification of their fund. so they invest into tranches accordingly, it will work. So if you want anything apart from this NAV calculation or NAV calculation, so please let me know anything. We'll get back to you on the same part. So thank you so much for watching this. We'll meet you on the next video.